The following is a presentation of TFNN. Trade what you see with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Happy Friday to everyone. Those of you that like to see Fridays come along. Frankly, I like to see Sundays come along. That's my favorite day of the year, or favorite day of the week. We'll start off with the breadth of the market. As you can see, we've even with the market having a pretty good rally, the breadth of the market still is not doing very well. That's the understatement of the year. It just doesn't look very good at all. Remember that October the 6th is a really key date that we're looking at. There's a Bradley model date coming in at that time, and we'll also see if we are going to be making a low or a high at that time. We had a pretty good idea of the low that came in this early part of the week because we made a perfect ABCD pattern, and all of the stock indices stopped exactly, where they should have stopped. The NASDAQ stopped at the 30 level. We rallied up to almost 142, to 4260. And then we backed off a little bit from that, given the fact that the jobs report was such a big surprise. And, we'll see what happens from there. Longer term, I don't see how you can view this market anything other than very, very bearish. It's just got some tremendously terrible things looking at it from my perspective. However, I did want to share with you some information that we talked about last week and the week before, because I wanted to remind you, this is the work from Steve Moore of more research up in Oregon, not very far from where the tragedy occurred in Roseburg, Oregon. That's the home of Umpqua Community College. The Umpqua River is one of the big rivers in Oregon. It's got a tremendous rapids that goes through there. One of my dear friends, Dennis Inouye, also a pharmacist that I knew all the time when we were in California, and we're still good friends to this day. He had a cabin, still has the cabin there, and we used to go up there and go fishing and stuff. And I remember the story of taking that thing through the river one day in the rapids with he and I and his son Lance, who was just about 10 at the time, and a snake from one of the trees fell into the raft. Oh, I don't think I've ever been more scared. I've done bungee jumping, I've done skydiving, but boy, having that snake in the thing was really, and it was a poisonous snake too. It was I think it's called an Oregon cottonmouth, whatever it was. It's not deadly, but it's a very, very serious bite. Anyway, we got it out of there with no problem. But boy, I tell you, I was ready for a fifth of scotch when I got off of that thing. And fortunately, I don't drink, so it was my legs were still shaking. But I remember that very, very vividly. Anyway, Steve does a lot of work with commodity graphics, and they have tremendous capabilities of matching patterns. And what he's done here is he's looked at the correlation between July of 1996 and December of 1998, how the market was making a bottom, and you can see how it was falling along. And it's falling along just exactly like what is going on right now in our market. So the correlation here is quite important. And as you can see, we're coming into October 1st. That's when the bottom was supposed to come in, and that was when, possibly 2 days. We were looking for around the 27th, 28th, when we had the lunar eclipse and the full moon, and we had a really strong rally. It was as good as any rally we've had, and whether this is going to be enough or not, will have to remains to be seen. But the overall market still looks very, very bearish. Folks, there's two things out there that you got to remember. One is Volkswagen, and the second one is Deutsche Bank. These are the largest companies in Germany, and they're both in trouble. And this is going to affect the euro. And the euro this morning made a huge rally right up to stop at a perfect 61% retracement up there at that 113 level. And, that's the time where you want to try to be looking to sell it, I would think. If it gets above 113.40, I'm probably going to be wrong, but that's what it looks like to me. Now, Now, we've had a rally, a very, very strong rally in bonds, a very strong rally in gold. Gold's gone up and made the 61% retracement from the high that we made at 1157. In other words, it dropped, $55 and it rallied $35 in a matter of 5 minutes. So, 10 minutes. So, these markets can get, tremendously, overbought, and they move very, very rapidly when they do. One of the things that I was asked to look at today was the give me 1 second here. I want to put up here to show you that the price of platinum has been making new lows over the past few days. And today it came down and hit the 1.27 level down at that 890, 891, 892 area. I believe the low was right in that area, and it's had a really strong rally too. Now, whether this is going to be the start of something big or not, I don't know. But frankly, I don't think it's a jobs report that would make gold and silver, move that much. Silver moved almost 70 cents an ounce in a matter, which is $3,500, which in a matter of a few minutes, and gold moved the same amount. It moved $3,500 or $3,000. So these are, really big moves. But we had a 2-point move in Treasury bonds, and that pales anything that could happen to bonds into gold or platinum or silver, because there's so many people that are in that bond market and note market. That's the largest market in the world, folks. That's just a really big one. However, one of the things that I think we ought to take a look at that we don't want to forget, and that is how big really the Forex market is. And this is the greatest trading market, ever invented. But you can see the trillions of dollars that are involved in the Forex market, between the spot market, which is the spec market, and then the Forex market, which is the market where they actually do cash transactions from country to country. But as you can see, the stocks are very, very small at 54 trillion, and then 157 in bonds, and then Forex, you can see they're in the quadrillions. I mean, trillion. So that's the real biggest market, and it's very, very liquid. And boy, believe me, there is a lot of trading that goes on here. Now, remember, when you're looking at Forex, there's 28 different pairs. Now, the Eurozone, which is the 19 countries that are in the euro, but there's 28 Forex pairs, because some of the countries in Europe no longer use their own currency. They use the euro, and so that's why you get that difference that's there. So there's a huge amount of people trading. It really starts in London. London is the Forex capital of the world. Don't let anybody in New York tell you any difference, folks, because that's where the real players are. Well, there's a lot of players in New York too, but the real Forex market starts and ends in the UK. They start late Sunday afternoon and go all the way till late Friday, but that's 24/7 too. So keep in mind that this is really a huge market that we have going on here, with this Forex market, and that's why you want to watch it. But we've had really good volatility, and folks, the volatility, we've talked about this in the past. It's just going to get bigger and bigger, and you've just what you've got to do here is, when you're in some of these positions, what you've got to do is scale down your size a little bit. Don't be too greedy, because what we used to wait for 5 or 6 hours to get a 10-point move in the S&P, we now get that in about 2 minutes. And today, look what happened in a half an hour, since it's been 9:30 to 8:30. It's been 45 minutes since the non-farm the jobs report came out, and it was we've moved 40 handles in the S&P and over 200 and some Dow points in just a matter of a very, very short time. And we're approaching, we could get down to where we could take out yesterday's lows in the S&Ps. Then you'd be looking at a potential outside day, and that would, put the market under a great deal of pressure. In fact, we're only a couple points away from that, right now. So we're really watching these things. In fact, the The NASDAQ is already approaching that low right now. We're very, very close to that low. And fact is that the NASDAQ would make a Gartley pattern, believe it or not. That's while you talk about volatility, shut the front door and raise the rent. You'll see that right around, well, we've got another 40 handles to go to get it down to that level, but you got to watch the NASDAQ at around about 15 handles from where we are right now, because that would take out the previous low of the day. And what would also do is it would be right at a 61% retracement. So you'd be at a really good spot if you believe that the market is getting ready to go higher. That would be the spot that I would think you would be interested in watching if you're going to be looking to be a buyer of this, because we've already dropped over, we dropped just about 100 handles in the NASDAQ and 40 in the S&P. So we want to, watch that for a potential bottoming in here. And remember, this is the last day of the month. What am I talking about, Larry? This is the second trading day of the month, but this is the last positive day for the last 3 trading days of the month, and the first 2 trading days of the new month are the 5 most positive days of the whole calendar month. So this is the last day of those 5 days. So that's all I'm trying to show you, that this is a positive day from the perspective of the foreign exchange, not the hedge fund people, not so much hedge fund people, but the mutual fund people. And remember, most of those people, they might have 1 or 2 technicians on staff, and nobody usually pays any attention to them. So, this is a technical thing that I'm looking at. That's, basically, what I'm watching when I'm looking at this. So just keep that in mind as we go through, looking at some of these things. But keep an eye on at that 115 level. It's about 15 handles from where we are now in the NASDAQ, and the number in the S&P, I believe we hit it. Just let me double check. Yes, we did. We did take it out. Yep, we took it out. I'll be darned. No, we didn't either. Yes, we did. Let me double check here. Yes, we did take it out. Yes, we certainly did. Let's see how close we came. Let me double check this right here. I think we hit it exactly. Wow, hold on. 61% retracement from the low on the 29th. That came in at 87, and we just hit that in the S&P. So keep that in mind, that that could be really strong support that we're looking at here in some of these things. And, these markets do jump around a lot. So keep in mind that this is what can happen when you're having fun in River City. Okay. The question that someone asked me was about the Chinese market and if it's opened. Right now, it's in the midst of the Chinese Autumn Festival. It's closed for, I believe, until Monday. It is also known as the Mooncake Festival, where people, share these beautiful little cakes with everybody as friends. And it really makes a really interesting holiday that they have there. And believe me, China has more holidays than they have work days, I believe, because they seem to have a holiday, every time that they have something like that, going on. So you want to keep in mind, that's what we've got going on. So listen, this is what we're looking at, folks. Live every day in an attitude of gratitude, and stay with me. I'll be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, boys and girls, Larry Pesavento for TFNN. Looking good, Billy Ray. Feeling good, Lewis. And we are approaching the number in the NASDAQ that we were looking at. That's down around 41.15. That's going to be an interesting number to look at because that'll take out yesterday's low. It'll be setting right at a 61% retracement. So you want to keep an eye on that as being something pretty significant. So we've already come down below the number in the S&P. We're setting at that level right now, but frankly, it looks like it wants to go lower given the fact that we're having all these wide range bars that are here. So keep in mind that's what we're also looking at. We also made the 61% retracement in gold from the high at 1158. That came in at 1136, so we're just a couple dollars below that now. We also made the 786 retracement in the treasury bonds on the long-term chart up around 160, and also the euro is right up at the area of the 61% retracement of the big move down at 113.24. So those are the ones that we want to keep an eye on for what we're watching, during these times that we have. We're making new lows now in the NASDAQ. We're very, very close, and we haven't even opened yet, folks. We've got 5 minutes to the opening, and the opening will be really volatile like it always is. Remember, when the market is really strong, people fade it. When it's really weak, they buy it. So, don't be surprised if you see a bounce here in some of these stock indices, right after the open, because, we've had some tremendous strength up, and a lot of people that didn't get involved with that will be looking for a place to buy. That would be my guess, because we're coming into support, but overall the market is extremely bearish. One of the charts that tells us that, we looked at the breadth, of course, but the chart that tells us the most of anything about how bad the market really is if we look at this New York Stock Exchange Index chart, and that is right down at the we almost made a double bottom down there of what we're looking at. So anyway, I was just informed by my Chinese Information Bureau that the holiday that's going on over there is called the Golden Week holiday. And this is also the moon time. Now, the beeper is just going off to tell me that the NASDAQ has just hit that level that we were talking about within, actually within 1 point. I shaded a little bit. So we've actually hit it, pretty much spot on right now to take a look at, what's going on with it. But that's what it's looking at right now. The holiday for China actually goes from October 1st through the 7th. And remember, October 6th is what we think is a key astrological date. It's very, very important from a technical standpoint. We have so many numbers coming in at that point. We want to watch it, very, very closely. To see what's going to be happening. Now, we'll be taking a break here in just a few moments here to see what's going to happen with some of these things. But in 3 minutes, the stocks will open. We'll see if there's going to be any buying. But if there's increased selling on the opening, that's not going to be good. That depends on whether you're bullish or bearish. But that could mean we could be in for a really strong down day for the rest of the day. Because as you know, these markets have a tendency to change, very, very quickly, and, can move very, very dramatically, to the downside. So we want to remind ourselves that this is what we have going on. The platinum, as I mentioned to you before, hit that beautiful number down there this morning, making a slightly lower low at the 1.618, and I believe that's what has given the rally so far in the market for the gold and also for the silver, because we've had such a really good move up. Silver moved 70 cents off the bottom and gold $30. So those are, really good volatile numbers that we like to see. So someone just asked me if that was the bottom of the NASDAQ. I don't know. All I know is my beeper went off when it hit the number. That's all I know. I'm just a technician. We have broken down now in the crude oil. We held that bottom relatively well for a while. I think we were talking about that on the John Logan show just a little while ago. But once we broke this 135 pattern that was, shared by Bill Longstreet and his dad, Roy Longstreet, that tells us that, we're heading down, to lower prices. Yesterday in oil, we made a beautiful ABCD pattern up there at that $47 a barrel level. We're now, better than 5% below that level in just a matter of a few hours. So oil continues to look lower. Today we've got strong metals, but the complex in oil is weak. So the deflationary tendencies are still out there, folks. 877-927-6648.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're back. This is Larry Pesavento for TFNN, and we're watching the markets come under some pressure. We are starting with a little selling the first few minutes. We got the Dow down 200 points, and some of the financials are getting whacked pretty hard. We got Amazon down 10, and some of the other stocks are getting hit pretty good. The S&P's down 25 points, down near that major support. The Nasdaq is still right there, down 64 points, right at the spot. Now, I posted in the long-term chart of Forex, and I wanted to talk a little bit about the, there we go, we're starting to break down more. we'll start. Hold on one second, folks. The old cowboy's got to do something for himself here. We want to discuss some of the Forex that we have going on. Bear with me here 1 second because I have my limits going off, and I wanted to make sure that what I'm seeing, that is the NASDAQ is down at the 61% retracement now. So we want to be able to watch that very, very closely here this first half hour of the market. We're still getting strength in the gold and silver. They're still strengthening. The bonds have made new highs, and so we want to be able to watch that. Now we're breaking pretty good now below the number in the NASDAQ, so we are really, really close here, folks. If this is going to hold, it's going to find out where we've already broken below it in the S&P, but this is the first few hours of trading, so you want to watch this very, very closely. Now, the market that really is interesting to, from a technical standpoint, is the Forex market. And I wanted to share with you just a little bit of what the Forex market is really all about as far as the size. And this is something that I think a lot of you might not be aware of. And if you are, I know you'd like to review anyway. But as you can see here, the Forex market is compared to the stock market is like 25 times bigger. It's about 15 times bigger than the bond market, and you can see how large it really is. The spot Forex market is where the speculative trading goes on, and then the larger Forex market is where the actual cash transactions go between company and country and country to country, as they trade their currencies back and forth. So that's how large the market really is. There's 28 different major cross rates that they trade. There's the 8 big ones, of course, which is the Canadian dollar, the US dollar, the Swiss franc, the British pound, the Japanese yen, and the Australian dollars. Those are the big 8. And but there are 28 cross rates. In the Eurozone, there are 19 countries. Some of those use the same currency. They use the euro quite a bit. And that's one of the reasons why you have to watch the stock of Deutsche Bank and the stock of Volkswagen, because that is Germany. That's the largest company in Germany, the largest bank in Germany, and those stocks look very, very bad. No other way you can look at it. There's just no other way you can watch this for seeing it. Now, I wanted to share a chart from one of my good friends and trading buddies, which looks really interesting in here, and that is the just a second here. I wanted to post 2 of them. First of all, I wanted to bring the daily chart of the euro in here to let you see it, and then also I wanted you to take a look at the hold on 1 second here. I've got to pull it up here a little bit here. There we go. I wanted you to see where we are on a 4-hour chart in the euro, because we're coming up to a beautiful pattern on the euro, and we're only a few pips away. And that is up around this 132.20 level, and excuse me, 131.20 level. And then you'll see that we're very, very close to an ABCD. We're in a downtrend. So that's the kind of thing you want to be watching here to see what's going on. Well, it's strange. We got the Dow down 222, maybe in honor of Mr. Gartley. Got the S&P down 15, the NASDAQ down 55. So far, the NASDAQ did not get far below the number that we were looking at. So you want to be watching it. The advanced decline lines is very bad. But even with this, the ticks are still not under 1,000. Which in the first 10 minutes of trading, you'd think that would be happening. So there's not a lot of selling, coming into the market to see what's going on from this level. So we want to watch it very, very closely. One of the things that people ask me, and that is, what do I look at most when I trade? The first thing I look for is the pattern, folks, because in the pattern, the markets, they only do 3 things. They go up, down, and sideways. That much we know. That's all a market can do. And what you do as a pattern recognition swing traders, you try to determine whether the pattern is up, down, or sideways. If we look at this chart, the 4-hour chart of the euro, you can see very distinctly, both on the daily and then also on the 4-hour chart, that the trend is down. So what you try to do is, when a market gets extended to the upside in a downtrend, that's the best possible time to to place a position because you're trading in the longer term trend, and you've got some similarities in previous swings to tell us that the market is repeating in the same manner that it's done in the past. And that's there's nothing new under the sun. We get that from the Bible. So that's what you try to look at. Now they don't always work, because once they go through these numbers, then you're looking at something really, really serious. It's like this NASDAQ down here at the 141.15 level. It's a very, very important spot to look at it. So far, it's held it by a little bit, but it's hanging on by a thread. So you need to watch that, very, very closely. That's the bottom line of what we're looking at. And believe me, the Fibonacci numbers, they're only a very small percent of what pattern recognition is all about. It's all about the geometry of how the prices get there, and also the numbers that are there to substantiate it. And that's all it is. I can't do fundamentals. I've tried it. It doesn't work for me. Like I said, whenever I do fundamentals, the first thing I should do is write out a check to the Chicago Board of Trade or Chicago Mercantile Exchange and just bypass the commission, because they always find a way to get in my knickers to take away my profits if I start thinking of fundamentals. And that's what I'm doing when I'm watching Deutsche Bank and Volkswagen. I mean, they're going to come out and say, yeah, everything's great, just like they did with Enron and WorldCom and what was the other one, Global Crossing. I mean, all those stocks, went to the junkyard, and you don't want to get involved with those kinds of things. So keep in mind that, the technician, maybe he doesn't get his rightful respect, but he doesn't have to listen to the baloney. He just looks at the chart. If prices are going up, there's more buyers. If prices are going down, there's more sellers. That's really what we're looking at when we're watching some of these things. So keep in mind that these markets do have some really big moves. We've already moved 22 pips or 20 points off from the bottom on that NASDAQ. So send the money in to me if you made that trade. Personally, I didn't, but anyway, we'll see what happens. Anyway, these are the things that we're watching to see if these things will hold up. We still got golds right at the 61% retracement up here at the 1136 level. The bonds the euro is only about 10 pips away from that number I was looking at, 113.24. That's going to be something that I would be watching very closely, and the market is ratcheting up to that point. One of our best trades that we've had this week here at TFNN has been the short or long Canadian dollar versus the US dollar, which has had a really big move in our favor. We were watching that for several weeks here on the show, I'm sure, as you all remember, and we've broken down well over 250 pips this week, which makes a very nice trade for the week. But it should have a lot more to it, because as we look at this really long term, going back to 2008 in the Canadian dollar, there's a huge ABCD pattern there up at that 134 and change level. And also there's a 1.27 expansion and also a 1.618 expansion. And the most the market went above that, I believe, was about 40 pips. Now, we didn't try to pick a top in this one. We waited for the market to hit that level and then sell off a little bit. And then we sold the first Gartley pattern on a half-hour chart, to get back into that level. And so that's really what we were trying to do, when we were watching that. So that was trying to minimize your risk as best you possibly can when you're watching some of these things. Now, another trade that still looks like it has a great deal of potential from the currency side is the British pound trade, and we've been looking at this for quite some time, and you'll see that. Give me 1 second. We've been coming down now all week into today, I believe, is the 13th down day from the high we made back on the sometime around the 20th, I believe. I think this makes it the 13th down day. And as you can see, this market has a tendency to make 13 down days. And so we should get a good bounce in the British pound, which we are getting today. So this is an ideal situation for watching what this bounce is going to give you in a few days. You usually get a 3 to 5 day bounce out of this, and we'll look to possibly be a seller of the British pound, coming in into that area. So that's the main thing. One question is about the Dow Jones, where we stand with the Dow Jones. As you recall, we were looking for a bounce to come in on the full moon and lunar eclipse of the 27th. The market bottomed on the 28th. We had the big run up, and then we had the 61% retracement back, and then we rallied up to a 786 retracement. And now what we've done is we've taken out that low of yesterday in the Dow Jones, and then also in the S&P, and also in the Nasdaq. So that could be a game changer. So far, it's held that major support. But if we go back below there again, then you're going to be looking at something, pretty substantial. But we are getting a little bounce off of these points, so this is something that we want to, to watch to see what's going to happen. We have a really strong, it's a what we call a Mary Lou Retton. If you remember her, the great gymnast, she always got 10s, but this is like about a 9.2. On a scale of 10, a cycle date coming in here on October the 6th, which is Tuesday, which will be very, very interesting. That's the anniversary date of the high right before the crash in 1987. And in that 2 weeks, the market dropped 38%. And I hope we don't see anything like that again, because it shakes everybody up, even the longs and the shorts. Shakes up the longs more than the shorts, of course, but it's not. You like to see a market that is, really orderly, and to see everything line up the best way. But we are going to be seeing, much greater volatility compared to what we've had recently. The volatility is really nothing. It's starting to increase more and more, but we're going to get back to where we were in the days of 2000, and we're about 2007 to 2000 through 2009. We had that tremendous volatility, and we're only running at about 15% of that right now. So those are the things that we want to watch without too much trouble, would be my guess. So we got a few more minutes here. Okay, we have a question from someone about the live cattle, and we're going to have Rich Anderson on the show, because Rich knows more about cattle than I do. But Rich is, if you remember, he's been on the show many times because he's a cattle rancher, along with being a really good friend and a hedge fund manager and everything else. But as you can see from this chart that I'm going to post on cattle, this is one of those things where the market is just literally, it should have stopped at the 134 level. We had a beautiful 3 drive to a bottom there, and this old cowboy took a nibble at it and gave him a penny and a half. And as you can see, it's dropped another 10 cents, and it's approaching the lows that it made back in 2014. And if you'll remember, up around the 162 level, Rich was very, very bearish cattle. It was a head and shoulders pattern, and we were watching that. It turned out to, work very, very nicely. Got all the way down to that 134 level that we were looking for, and then you can see what happened after that. The news came out that there was a lot of people wanting to sell cattle, and that's what happened. So we're going to have to tell Rich that we're going to have to give him a old Desi Arnaz question. Lucy, you got some explaining to do. If you remember the old Lucille Ball show from the 1960s and 70s, that was a good old days of TV, folks. The redheaded princess was really a great, spectacular actress. Anyway, those days are gone. We don't see anything like that anymore. Now it's all about a whole bunch of things you can't even talk about on the air, but that's neither here nor there. Okay, we talked about the Dow. We talked about Steve Moore, the possibility of this market, making a bottom in October for a rally. No matter what, we're going to see some tremendous volatility here. But frankly, with this report that came out, and come on, boys and girls, they change these numbers, like I change my T-shirts once a week, for heaven's sakes. We'll see what's going on. This is unbelievable. Anyway, someone asked me a question: how many TV sets and movie sets did I get to go on when I was in the Los Angeles area? Well, the main the building we were in, the McCulloch Oil Building, was across the street from the Howard Hughes Building, which was next to the UCLA Medical Center. But that McCulloch Oil Building was the biggest building in LA, and Banachek was filmed there, and McMillan and wife, they were there there every day. There was somebody on the set. And that's where Jim Twentyman met his girlfriend. She ran the catering for the movie companies. We'll take a break here. We'll be right back to wind up the show.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Okay, folks, when we were on our break, the NASDAQ went down and tested that level one more time down there, and I've had a request to talk a little bit about the stock of Wynn, which is a gambling stock of Steve Wynn. And as you can see, this is a chart that I posted earlier in the week, and we are looking at a weekly chart. And as you can see, we were trading at around $50 a share. We're now down to $55 a share, and that's up from 52. It's had a big run today on a short covering rally, but this is indicative of the things in China. The people are not going to China as much because they don't have as much money to gamble. That is telling you one thing: this stock is down, 80% from its high, and then you're starting to see that Chinese real estate has slowed down a little bit, and the country is pumping in money with their quantitative easing program, much like we did here. Once Bernanke started this process, it has gotten a lot worse. I noticed today that Bernanke is publishing his memoirs, and one of the things that he was sorry about was the fact that Lehman Brothers went under in 2008. Well, if you look at the stock of Lehman Brothers from 2008, and you look at the stock at Deutsche Bank, you can't tell one from the other. One is vanilla pudding, the other is chocolate pudding, because, boy, they both look alike. So watch Deutsche Bank and watch Volkswagen, because if they fail, Germany's going to have a real difficult time trying to support the euro, which is, that's their baby, and they're going to have 600,000 employees in trouble. And they're not going to let that company go under. It's going to be, something's going to happen to it, but I don't know which. The stockholders might get wiped out, but that company's going to stay in business. But, watch for it. It might be a tremendous buy, somewhere down here, a lot lower than where it is now, because it's dropped 40% in 5 trading days. So you'll see what's going on about it, and we'll see we'll see what was happening. The problem with Lehman Brothers, they were their biggest competitors of Goldman Sachs. Henry Paulson was the Secretary of the Treasury, the former CEO of Goldman Sachs, and boy, he certainly didn't have an interest in saving Lehman Brothers. That didn't take a rocket science to figure that one out, did it? Live every day in an attitude of gratitude, folks, and do something kind for somebody who has a lot less than you today. May God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.